last week we only really touched on one price level that I thought was going to be relevant for this upcoming week, and that was NQ all-time high. If we were to look back on the previous week closing really strong, and we're basically making a failure swing to this relevant high to the left, and this is a high in the market that I'm going to care about because if we've created a failure swing to this relevant high here, I know that if we were to reverse and these other pairs were below, it would have been a little bit less interesting. We would have liked to see how price engages with this high, considering how deep we've traded into it on NQ. That was pretty much all I had in terms of this is something I'm going to look for, and then let Monday provide some context. And then also with the economic calendar from last week, we had CPI at 8:30 on Tuesday. So that's high impact news. So context here is Monday, but then also 8:30 on Tuesday because I'm not going to be trading before 8:30. I'm not going to be trading through 8:30. All of that is context to what I should expect the market to do. So I don't have to make any wild assumptions before the new week opens, but using that as something that is going to provide some context for any price action to follow. So I can pretty much skip right to CPI on Thursday because Monday itself didn't provide as much context as I would have liked because we didn't engage that high or didn't really set up anything inside of Monday's candle to get up into that high, and that's where we'll roll over into Tuesday. I did not have a trade on this day, but we'll get into why that is. If you look here, CPI came through. Decent range on this, nothing too crazy. But if I'm going to look to trade up into this high here as an objective, and even seeing ES and YM get to that objective as well, because there's a little bit more room to capitalize on. I'm going to draw these out. There's only so many ways that this can happen. First way is CPI is going to come in. And because we can look inside of Monday's candle and assume there's an unlikely reversal, because that's a very small wick, we can look inside of that. And really CPI taking out previous day low. You can see we had failure swings too from the overnight session. CPI manipulating that low would have set up a really nice framework to get up into that high. And the only other thing that would be of interest to see a continuation up into these relevant highs above. I'm going to note this a little bit more on ES because of that separation, a little bit more room to capitalize on. We have previous day high, which in itself is a relevant high in this context. If you zoom out to the daily on ES, we have that larger distance from this relevant high. This previous day high, that distance means these are two separate relevant swings. And if we're not going to manipulate that low to then turn higher, we have to seek a breakout signature of that high to see it valid as trading the continuation. And CPI did not manipulate the lows. It left behind failure swings, which you can see on these pairs here. Failure swings to the lows. And that moves my attention to the highs. Really the only thing is building some context around what price does here. We're focusing on that 15-minute time frame because CPI comes through 8:30, runs up right up into that high. You could even think short, and we'll cover this as well. But we form these down close candles going into the open. Very clear on the 15-minute. That is my usual first time frame that I'm going to be using during the New York session. I'm not going to drop to the 5-minute if I don't need to do that. 15 minutes providing a very clear signature. We've run up into that high. And a failure to manipulate would be that breakout signature that we're talking about. So turning up into the high, forming down close candles, and then closing right back through. That's a failure to manipulate. And we could assume that price could continue from there up into that next relevant high. That's noted by a potential close here on the 15-minute, which it failed to provide. So did not give that continuation signature. 15-minute candle close was not above. It made an attempt. It was pretty close, but eventually on the end half of that 15-minute candle breaking down, not providing confirmation. And this here is where this turns far more unlikely for me to be having a position on this day as it's breaking down from the open. This is not valid to short. Very simple that we can't reverse this position simply because we've left behind at the highs. Imagine we see this breaking down at the open. Maybe that gets you excited to see this could go short, but it's not a valid short because we have true failure swings at the highs. This gets really deep back up into that high, and then NQ, same exact signature. You want to look across the markets to make sure there's no divergence here, because that can change the dynamic. YM as well, failure swing to that high. So we are not countering this because the open went a bit lower. That's not valid framework. That's not part of the system. We still need to see something off the highs if we're going to short that. We're not placing our stop on a intraday failure swing. That's not what we're doing. So that's not an option. For me, this becomes uninteresting when it breaks down like that, because I liked this signature here. I wanted to create these down close candles immediately close through, and that's what I'm looking for. I know some people are now seeing this here, this new close above, as a continuation signature. I think that's valid. The idea does still stand, but I do like to see that through the high that it's breaking out of. So this became a little bit less interesting, you know, NQ, a lot back deeper back into that range. Same signature, and the high was still open. YM propped up a little bit better, so this is probably the most convincing one. But I was looking for that 15-minute close, something to position on. That was not offered. But you can see how the narrative plays through, where it's failing to manipulate, getting these closures back above down close candles, not manipulating that high. We see continuations, and then ES basically captures to be your move here up to that relevant high, that second half of that daily candle. Failing to manipulate that high, we can assume a continuation and look to capture this bit of that move here. And the only reason I don't need to concern failure swings is because of that signature. Otherwise, if that's not there, then I'm not even entertaining that long at all. So that was that day. I think I saw a few people ended up taking some trading here. Again, short's not valid. You can't even consider that for a second, regardless of what's happening in here. I know some people off this long. It's fairly straightforward in the process when you're just following the steps. I don't know if people had specific questions on that day. What's going on, Trista? How you doing? How was your Wednesday and Thursday candle have so much body? It probably is because you probably have one of these settings on set or be adjust. I don't know if that actually doesn't make much of a difference. So I have these two settings, be adjust on, set off. Sometimes that can change the candle close on the daily. Here, I guess it doesn't make, I guess it makes a decent bit of difference here. That's probably what you're talking about. You probably have set on, turned off. We have an SMT, which is thick SMT. Are we considering it long term? What do you mean by a tick SMT? Are we considering it in long term analysis? Yeah, maybe just the wording. When the SMT does not clear the low. Oh, so you're saying if it just barely by a tick goes through. It's technically still valid. I mean, when you look at, I know some of these can be very close. If it's, you know, over by a point, it still technically did run it out. Obviously, I like to see it be a little bit more clear. I don't want to have to zoom in just to find a manipulation or a divergence. So technically speaking, it is still valid because it ran through that price level by a certain degree. I don't think it's all that common, but overall, yeah, it is still technically valid. After we get the 15-minute close, failure to manipulate, if the first continuation is not offered, then we leave means we cannot trade the continuation in the second time. For me, it's not as interesting. I don't like that as much because this here is, that's the signature we're really looking for, is this off. We want to see it basically right at the high. We can't short this again. We could even go to the 5-minute. There's no signature here unless we were to close below this. But you're really only focused on if we get a continuation signature through. And this here is right at that high. So through that high, immediately failing to manipulate. Once it starts breaking down a little bit and then starts to come back up and the closure is not through the high, I don't like it as much, really. I mean, it is fully one-sided because of the failure swings at the high, but not something I was wanting to position on. So I was comfortable letting that go. And if we even kind of tried to refine that out, want to remove some of the noise on the 30-minute, the stop gets a little bit wide. So like I like this, right? Because now you're going back to that same logic, filtering that out. It's just pretty wide on the stop loss for that time of the day, 10:30. It's pushing it. So you get some of a move, but I don't even think you'd reach 2R on that there. I mean, like that's just a very wide stop, especially considering time of day. And consider if you're not even reaching 1R. Actually, slightly over 1R. Which is okay, I guess, but yeah, 1.5. It's decent, kind of fair. Just not really what I want to trade. That would have been, in my opinion, probably the most valid approach to that. Your entry is based off change of state delivery. I would usually let that go. So a CISD is going to be at the point of reversal. This day is a bit of a slightly different framework because we're framing a breakout and not an intraday reversal. We're actually trading away from these failure swings. We'll talk about that today, but a change in state of delivery is going to be at the high or low of day. And then what I'm entering on is going to be what I would just consider valid opposing candles, because that's what we're looking for to be respected, assuming the higher lower day is already formed and that continuation is taking place. Opposing candles is what I'm looking for. Now we compare that with confluences. You'll see that in the content of a divergence, volatility drivers, and running at a short-term low. And then at a baseline, we want to see clear candle bodies, a wide enough range to protect that stop loss. We're not entering on very small opposing candles. And that's all alongside the daily profile as well. Shorts were not valid as there were failure swings above, yes. Yeah, it's a good question. So if we didn't have failure swings at the lows, you do get a lot more freedom in how you can enter this, because we don't really care about that previous day high, because we're assuming, let's just say, we'll even say that news came down, took out that intraday low, took out previous day low. And now we have actually a really nice framework. And after this, like, I don't need a breakout signature because there's no failure swings at the lows. We're just looking for a continuation. So here, I'd actually be very comfortable with something like this, because we're not really concerned with previous day high. We've already put in a protected low, and we have that framework to trade this higher. We're not assuming manipulation here anyways. Yes, that would change how I'd approach this. Only one red folder next week on Thursday. Meetings. Are we only looking for the trade Thursday? If yes, what's your protocol? Days without news. I will get to that, but like, if I can tell you that really quickly. There is FOMC meeting minutes. I don't care about that very much. Basically, any day of next week is valid, and there's no high impact news. So I would only really put focus on 10 o'clock Friday and 8:30 on Thursday. Those are the two that's going to be relevant for volatility drivers. These other ones here are just not something I care much about. And they're low impact, so it's not going to change. Meaning I can't trade at this time or that time, because that's only with those 3 high impact news drivers. If there's no news, you can still trade on that day if there's a valid framework and price. That was Tuesday there. We can run with the framework up into, again, right back to all-time highs. When we're at all-time highs, I mean, we have this one price level to get a gauge off of, but we're floating in no man's land. There is nothing really to reference, and this comes back to, in this condition, we're basically pretty much only gauging reactions off this intra-week price action, because there's not much to the left that's really going to provide too much context. Going into this day, I did favor seeing a continuation because we are working off this deep close through on NQ to a potential continuation, but we need confirmation of that. I was entertaining that as an idea. NQ, or YM, I should say. A little bit weaker. Follows through a little bit better, but we'll get into this. When it comes to the short side, technically previous day high is a relevant swing because, again, there's nothing to the left. If something develops bearish, it can be valid, but you can't really see that immediately. So we'll just walk through the process here. Initially, we did have the daily profile. We're looking to the upside because we want to filter out one side of the market eventually, especially when the bias can develop on either side of the market. We have 18 candle forming a low. We're letting this go always. We're initially looking bullish. That puts in a low. And this candle does not take out that low. Need a market. Then we are not trading within the 1 o'clock candle. That's just the process of the daily profile. That forces us to 8 o'clock. 8 o'clock Eastern, we have to wait for that anyways. We're using all this as context. By the time 8 o'clock comes around, we started discussing the open. Waiting for that makes a lot more sense. This is basically what we're looking at here because that is a valid profile to be trading 8 o'clock as a continuation higher, but we need an actual signature to see that, so we can note off 8 o'clock here. I'm not viewing any of these as valid opposing candles. This is pretty undefined consolidation. I know we get some close above here. There's some opposing candles, but I don't see anything to actually position on here. You know, kind of, it's like, okay, not really viewing these as that interesting. And then it becomes just 9:30 is coming up, and that's going to provide all the context you need. I know there was some slight difference in strength and weakness here. YM kind of went off on its own. But as this plays out, 9:30 comes in right here at the high. If it's going to go be a continuation, 9:30 is going to push this higher, and it's just going to be a day I'm not on side because there was nothing to position on going into the open. And as 9:30 comes through, this is the development that says it can change the dynamic because we know we're above previous day high. There's no high to the left, so I'm relying on 9:30 is putting in a reversal on this. Failing to continue, it's reversing price. So it is valid in the development to be looking at the other side of the market here because there's nothing validating a continuation in this. Look at the 5-minute. Off. NQ is the weaker pair in all of this. ES getting a little bit of a push at the open. NQ failing to continue on the weaker pair, failing to confirm that continuation. YM had a pretty strong day, but wasn't paying too much attention there. So this is where 9:30, we're just waiting for that development. There's no entry on it, ES, so it's breaking away without you. So no interest there regardless. So I can look at NQ failing to continue and putting in a high at 9:30. And then right around 9:55, we have these pairs starting to break down. Even the strongest pairs are breaking down as well. And that's where I can be interested in flipping the bias. Now, when doing this, I have to be aware of what this daily candle is. If we look back from that daily open, this is a fairly large run from that daily open. So if I'm going to be shorting this, I need conservative targets, which would be around that daily open, which is right at these intraday lows. I don't want to be looking for a trade that's going to put me much extended beyond this low here, because we know large opposing runs are forming that wick of the daily candle. And large wicks are likely reversal candles from that opening price. So we don't assume a large candle body to be expanding past that daily open. So I want my target around that daily open. 9:30 comes through, and considering that as well, that I need to be positioned relatively early to actually get this trade. I can't take a trade down here because there's no room to capture any risk reward to that low. Off the highs, we're seeing that first signature. Price is breaking down, but NQ is leaving behind a divergence, so a lower high. ES and YM are putting in higher highs. This here, weaker pair is now leading the move lower. We have an initial reversal confirmation, and I can use this candle here because on ES, this is a higher high. This as my reversal confirmation. I'm not going to enter on the reversal because I want added confirmation, but on that next opposing candle formed close below, This is where, if I'm going to take a position, to me it's fully one-sided. There's no way that this can be turned bullish for me. So it is a fully one-sided idea. And the risk to reward makes sense positioning on this. You set up a short position, even make it a little bit more conservative. Reward, not that intraday low, is giving me towards a 2R. Even if I was targeting that daily open past 1.5, ultimately I'm going to be going for that low. So here, that's a continuation. And I do want to preface, like, a trade like this is not some home run idea. It's not my A+ setup. It's not something I have a huge expectation on or I'm going to size up due to conviction. This is just, I almost feel like it's almost like a maintenance trade where it is good enough to put on, but it is supported by narrative, but not in the sense that I have large expectations for how this trade would actually play out. So I do want to kind of note that on this, that opposing candle on a framework where I feel I really want to be protected and I'm going to be sizing up on because I have high conviction. I don't think I would take a signature like this because I want to be really sure that I'm going to be staying in that trade. This here, the dynamic's just a little bit different, but when we walk through the steps, it is valid framework to be taking this position. And looking down to that intraday low, that's where I got an initial QR a little bit earlier and then fully taking off at that lows. And then you can kind of see how that daily candle, when we zoom out, right, reversal candles, really large run from that opposing, large run from the opening price, bringing that opposing wick, coming back down, and then not getting a large expansion through that opening price. That's creating that daily candle that we're expecting. And you can kind of see when we hit that target, price doesn't have much more room to go. We're not breaking down again. So taking profit is going to be more aggressive. It's going to be fully off there because we understand how that daily candle should be forming. And I'm kind of breaking that down to a lower time frame there again because you can only wait so long to get this position, right? If we're on the 5-minute, nothing's offered, you're not going to get that trade. It's just too late in that move. It won't make sense for that target that we're going to be relatively strict on. We'll go back to that one. Let's see. Bias, I will talk about when we go through this review. Yeah, that candle, kind of like I mentioned, this trade is that 3-minute signature. This is not my ideal setup by any means, and my risk profile looks a little bit different on this. So there are times like I'll miss trades and I'll just watch them go because I'm not interested in the signature that's being offered for the entry, because I'm not going to just put myself in a market and not know where my stop loss is going to go. So that's something that does happen sometimes. How long after data are you waiting to make a trade? Tuesday I got in after data, still on the 6 a.m. 4-hour candle, then moved up into the 10 a.m. So it depends what data it is. I mean, if there is high impact news, then there's far more strict rules around it. You know, if there's CPI at 8:30 and we can't trade before, after, it's not really like a timing thing. I don't need to say I need to wait 5 minutes, 10 minutes, 15 minutes after a news event to get positioned. It's really, if I'm waiting for the release, I'm using that as context. And then any time after that, a valid signature is offered. If it aligns with my bias, then it's fair game. There's not really a specific time window that I'm dedicating to say I have to wait X amount of time after the news comes through, or even after the open comes through, that I have to wait. Question I'll come back to here is, it's not, I mean, not off topic, it's still related. When did you stop making stupid decisions that you know were keeping you back? I mean, that's a really long process. I still make stupid decisions. They're just not to the same degree where it's going to ruin my week, my month, my year. There's a difference between that. I still have to review my trades because I do things that I would consider dumb. I mismanage my trade. I take profit too early, too late. I don't take an entry when I know I should have taken the entry. to me, that's a stupid decision because in live time, I usually know better, but that still happens. The degree that changes is stupid decisions earlier on can ruin you for months. You can be really good, and one bad day is going to take you out. That probably took at least 2 years to stop doing that. And it's not easy, but I think it has to come with a level of trust in what you're doing. And then also, you have to have stupid decisions can be a wide range of things. Usually, it's going to lead to over trading, over risking. That's probably going to be the sole reason for it. And I think really simple intraday rules are going to prevent that if you actually follow them. So, for example, I'll never take more than 2 losses in a single day. Doesn't matter what's going on, that just will literally never happen. And that's just damage control, knowing that there could be one day where I'm just completely off. And if I don't have that rule, then that can ruin a lot of progress. I can take 2 losses. I'll figure that out. I can deal with that in a worst case scenario, but I'm not going to let myself go beyond that. So there's certain things you have to implement for yourself to avoid that. 2 minute. Honestly, 2 minute probably gave a better signature. I don't want to say go on the 2 minute because might get carried away, but there are times like that looks a little bit more defined on the 2 minute. On a really fast moving market, honestly, I get it. I usually won't put that in anything. When you look at NQES to frame anything, I mean, you can look at MNQ, MES, especially if you're trading them, if that's easier. Sometimes it's going to be very small discrepancies. You can get, different closures, different wicks on micros compared to minis. I'd follow the mini charts if you can. And that's probably more common around news releases, high volatility events, where, the tape just gets a little thin and can gap to different areas because they're technically traded separately. Most of the time you can get away with just, if you want to use the micro charts. FOMC meeting minutes release 2 o'clock. Usually saw the market mostly consolidate before the news. So that's a different event. So FOMC press conference, that's high impact, so 2:30. I don't look to trade before that event. This next week, FOMC meeting minutes at 2 is still considered low impact for me. That's a different type of event, and I will trade before if it's offered. I'm not fully concerned with that news consolidating the market. What's the ideal time frame to use during London if I'm going to hold my trade to New York? London session, 15 minute, 30 minute is probably where I'd be. Dropping to the 5 is usually too much unnecessary detail where the candles are just not printing with that same level of speed, and you're just going to get a little bit confused. For example, like this is London session, opposing candles, and then New York becomes a lot more defined. 5 minute makes more sense during New York. Pre-New York is not as useful. So 15, 30 minute. Thursday, we can get into this here. Jogging my memory, I think this was uninteresting pretty quickly for me personally. Yeah, we had that news pre-market. Okay, that was Thursday. Yeah, this was super simple day. There's really not much for this here. I mean, we had this news. 8:30 came in pretty hot. Nothing to talk about before. Pre-market was just pretty much ranging. And news came through, and I actually liked if this was offered. Running out intraday high. Go back out to the daily in respect to that daily candle wick on NQ. Weaker pair. Go back out, 15 minute. ES, that same high, lower high, so divergence, ES. And I was looking to see if there would be a continuation signature offered because it's technically putting in a high of day. Range, New York reversal. Breaking down, would have liked to see a continuation signature here. Could even drop to the 5 minute. That's fine as well. we're getting an up close candle. I didn't like how deep it ran, but I still likely would have taken this as an entry. There was a few things I was looking at here. First would have been that 5-minute up close candle. Close below could have been of interest here. Failing to provide that. And then we also have towards the open, when we wait post open here on ES. This was developing into a potential idea. Again, failing to get that closure in the continuation. But we formed a 5-minute up close candle on ES while NQ was being a bit stronger. This was forming a divergence. And this could have been an interesting entry if that was provided, but they all started breaking higher. And to me, I'm not trading this to the upside. That's far from interesting for what I look for. The day didn't really do very much past that. There's nothing here for me to enter on 5-minute wise. So I just I don't really have anywhere to go past that. Once it breaks higher, not providing any continuation signature, then I don't really care what's going on past that. You know, it goes to highs, starts ranging back and forth. I don't want to trade the upside just because the low of day is a little bit undefined. And by the time any entries offered here, where's your target? Same thing. Pretty messy. So not something I'm looking to enter on. And I think I said upside, I'm not even interested in. Failure to give the continuation signature. The day is basically over before 10 o'clock. Did YM provide a... Okay, it's... Time is this? 9:40. I didn't like how strong these were here. NQ at 9:40. Fighting quite the train there, but I'm okay with that. We're at the high, opposing candles 40. Bullish YM from the daily. Yeah, I mean, it was definitely propped up a little bit better for that. YM was the train this week to the upside. And honestly, that leads us into Friday because this is the idea for Friday, what I was looking for. It was not something that I was seeing day before because we have a little bit of a lack in correlation off these higher time frames. So there's some different potential that can play out. But as we got into the New York session, this was the framework I'm seeing. Relevant high. Again, Wednesday's high is relevant because there's nothing to the left. I'm running up into that. NQ, creating a lower high, so a divergence. And then YM with really solid weekly range logic as it was coming up again. We have a relevant swing to the left, a weekly objective ran out, a Monday low expansion through that midweek. And I'd like to see Friday return back into the range. And that's really the framework where ES and NQ are forming a manipulation, a divergence. YM has weekly range logic to point to the downside. I just really need to see confirmation in that daily profile. And here, opposing run from the 18 candle, 1 o'clock candle, putting in a reversal. If I look inside that 1 o'clock candle, series of up close candles, a little bit undefined. We could always zoom out if we need to get a better perspective on that. Right, higher time frames filter out the noise. So within that 1 o'clock candle, we have a reversal signature. So we can confirm that 1 o'clock high is in place, and we can assume 8 o'clock can be a continuation at New York session. And I know that YM is the pair I'm interested in shorting, especially around this time here, because there's no real divergences off the high, nothing significant, because they're all forming London reversals. But if we look at these up close candles that were closed below, and we compare that to ES and NQ, not having that same closure, but we're still respecting that London reversal. That's where it was interesting to take position on YM, assuming the weaker pair, because we're getting that close. And that was more of what I consider a positional entry, because that's a higher time frame signature. Positioning here, stop loss at that high into the open. And then I'm still interested in taking another position if offered through that open. But we're not staying on 30-minute time frames, 15-minute potentially through the open, because we're assuming it's going to move fast, which is what we want to see. Stop loss at that high, 930 breaks down. We can kind of see a comparison here of the follow through on these. But we go down 5-minute manages trade to see potential new entries. And this was offered up close candles, very clear, close back through. That becomes a continuation signature again on the 5-minute after the open. And this became a good area to pyramid. It was a very small pyramid because my average was already up here and bumping it down because my trailed stop loss is now at this high. Too much of an add would have bumped it a lot lower, but adding just a little bit bumps my average near this new trailed swing, and that's my new stop loss. And it's basically a risk-free add in a sense that I'm letting this trade play through anyways, and I'm trailing my stop here anyways. I might as well add to that position. And here I'm putting on new entry on the close below, stop loss at that high, and we get that final breakdown. These intraday lows, and then you can kind of see the difference here. Yes, and NQ did get a little bit more of a move, but not as strong. A little bit more of an aggressive turn. YM staying more aggressive on that initial move, which is what we want to see there. And I do know, yeah, you took this was a decently wide stop loss. I do wonder I would have took this open if I didn't have the position on already. I think it's 100% valid. I just think, I don't know how much you got up. Probably not. Yeah, break even's honestly relatively fine with it. Or where you filled, but got 1 hour for that. A little bit past. Yeah, it's borderline for sure. 1.5. Yeah, as long as that was part of your plan, then it's fair management. When someone uses the 1 hour and 5-minute time frame that provides itself in the 30-minute, is it considerable to enter? If you're talking about like the time frame alignment for entries, if someone uses the 5-minute time frame, 5-minute time frame, like yeah. So for me, when it comes to time frames, I'm pretty loose in the way that I apply them. Where I have a general list of time frames I'm going to use in certain steps. So I'm going to go. Daily is always my baseline time frame for bias, but when it comes to entries, in this London session here, main time frames will be 15-minute, 30-minute. But like in this example, 30-minute, let's say that's my highest time frame. I'm still open to going up to an hourly time frame to confirm a signature in here. So let's say like these opposing candles, I can pretty much assume just looking at these that an hourly time frame is going to provide a better perspective because we have a bit of a breakup here, and it's just going to give me a better look on this, and it does. So this becomes a more clear signature that I can bump up to the hourly, but I'm looking for the same idea. It's not changing my process, but I can cycle through the time frames a little bit. Same with the New York session, it's going to be 15-minute, 5-minute, but I can slightly move. If the New York session is offering a 30-minute entry, then I'm going to take a 30-minute entry. But most of the time, that's my main focus. I'm going to go higher time frame down to lower. And whatever's being offered, that's where I'm going to be putting focus. I think, at first you can probably be a little bit more mechanical in that, but over time it becomes pretty easy to cycle through time frames to find the signature you're looking for. Adding to that position just because I'm expecting a little bit more of a move here. And it's honestly just because if I'm already going to hold that trade a little bit longer, then adding it doesn't really make much difference, even in terms of risk to reward. Right, my 2R was right around here. If I'm adding more, it doesn't change the risk profile of this trade very much. And I'm just adding a bit more if I'm already going to hold that position. So it's not like changing my targets or anything like that. And then beyond that 2R, it's just a little bit more trade management. So great, I can get a little bit more off on that trade. Big stop, which is, yeah, it's fine. It's a valid entry. Yeah, like if you use the hourly time frame, opposing candles didn't provide themselves on the 30-minute does. You take the trade on the 30-minute. I would say yes. I think there's a degree to that. So like on a higher time frame like that, it's probably not that big of a deal. But let's say you're on a 5-minute time frame and you don't see anything, you don't drop to a 1 minute to try to create some signature that isn't really there. So there's an extent to that. But when you're cycling through these similar time frames, it's fine to do that. Hourly, 30-minute, 15, they're all going to give you generally the same thing. I think once you get down to below the 15-minute, that's where you want to be careful refining too much. 4-minute NQ, what, on Friday? I think I even ended up on this time frame. We're talking about this here. Yeah, honestly, I wasn't even looking. Sometimes I get asked about certain entries, and I'm like, just for some reason, I didn't even look at it. This is one of those, just because I'm already positioned on YM here, and I'm adding to my position again at pretty much the same time. So, would I have taken that? I feel a little bit, it's okay. I'm taking that. Yeah, it's a little borderline for me. But it is, yeah, it's in the continuation. 5-minute wasn't there, 3-minute wasn't there. Yeah, 4-minute, you do technically get that close on this. But yeah, I'm already on YM, so I don't really need to pay attention to ES or NQ. Also, I would have liked this a little bit more if ES or NQ took out this high and then got a nicer close post open. Right, this is like perfect if this was offered. That's a really deep close. Neither pair took that high, but this would have been. This is ideal. Running that out, then I would have probably been more towards something like that, but didn't like it as much. It's pretty here. Went through the content, haven't seen the live stream. Yeah, if this is your first live stream, the way I basically run this is we're going through last week, everything we talked about, trades taken, questions, and then every day I'm trying to go top down of where maybe the day became invalid, where it was valid, where I'm flipping a bias if that's in the cards, entries. So basically every live stream we do that, and it's trying to revolve a top-down approach of the system in the actual market, because the course is going to be, those are written up examples, not ones that we go through every single week. So it's basically in the content structured in the same order that you would apply it. So it's going to be basics, economic calendar. All you really need to know about is high impact news. Drop down to a daily. The basis of the daily is to find relevant swings in the market, and how price reacts there is going to be our gauge on how to move going forward. And there's either going to be manipulation, continuation, signature through. And then we align that with a daily profile. So daily profile is going to be a confirmation. So let's say you have an idea of being bullish. You want alignment of a bullish daily profile. And if we are getting that, then alongside that daily profile, which is confirming your bias, you look to position in that same direction. And most of the goal is, I think at first most people should focus on post open, but ultimately it's late London session, early New York session, trying to capture that expansion move, really one move in that daily candle. But in examples, like live stream, pretty much every single live stream, I'm going to go top down. Yeah, if you have a specific question, phase of price, it does make its way into my system. It's pretty simple. But yeah, if you have a specific question, definitely throw it in the chat. Yes, there will be an extension of the community. If you're on the wait list, you'll probably be getting emails every once in a while. Doesn't change anything here though. So it's not like a concern or anything. Yeah, so it's completely separate, right? So we have this here. This isn't going anywhere. It is separate from what we're doing in this. But again, doesn't change here. It's optional, but we'll keep sharing as we keep going. More towards, I'd say, September. Kind of, maybe not specific. I would say that with what we have now, the difference is going to be a smaller group format, and it's going to be more custom in the way that we have certain restrictions for what we're able to do now with kind of the infrastructure we're working with. We're building out our own platform. We're going to have partnerships. TradeZella is one we just put an email out about. And we have way more freedom because we have many ideas, and we're basically creating an ideal world of what should be offered. And it's just because we have full control over our own platform, our own infrastructure, certain partnerships, and smaller group things that just aren't really possible. We have a 4-hour swing. We have a swing at the 4-hour and 1-hour. What will you wait for 4-hour candles to tell you a new phase of price? I probably don't use it in the same way. When it comes to the phases of price, most of it to me, like the one I really care about is expansion. So like this, for example, the main rule is going from expansion to some other phase, reversal, consolidation, retracement. But I don't really need to judge those three in between expansions. I just need to know, basically, this is that expansion rule in the content, that if after 3 days of expansion, we can assume, especially intra-week, that the market is not going to have another continuation the following day. And that is going to be a new phase of price. But that new phase of price, I'm just going back to relevant swings and their reaction at them to know what is happening next. So for example, if we have an expansion phase, I know that I'm not interested in another continuation day because we've had 3 days of expansion intra-week. That's the end of an expansion phase. We're going into one of the next three. I don't need to know if it's consolidation, reversal, or retracement because I'm just going to use relevant swings, which is this high here. I can note out this high here. What if this candle came in and it printed like this? Okay. Failure swing at the high, failure swing at the lows. Well, suddenly we're now just going back to relevant swing. What if the next day is like this? We're in a consolidation phase. And I didn't need to know that on this day here, on the close of this day. It's just following the process. This day came through, ran up into that relevant swing, printed as a manipulation, so we can trade that as a reversal / retracement. So you really only need to understand expansion phases, 3 days continuous expansion. This is just a thing of the market that we see. Majority of the time, you're going to see 3 days of expansion. The market's going to pause or turn in the other direction. That's just a tendency I've found throughout the years of watching price, and that's what we're following. So when you understand the expansion phase, you just use relevant swings and what they do there. And if it forms failure swings, then you know what your process is. It's really just those. So you're probably, almost subconsciously trading the logic without maybe realizing it if you do it that way. Ever trade seek and destroy situations? It depends. If it's ranged, daily, we have manipulations of both sides. This is a decent example. This is technically seek and destroy on the daily, going back and forth from the range. I'll trade that. It's just consolidation, really. Trading the external range, the consolidation, which I actually love to do. Probably my favorite condition to trade. Price will not be the same now. And it more advanced or basic. It's honestly, it's more basic to more advanced, if that makes sense. So we're trying to cover an entire range, not just more advanced, or right, we're trying to like take, even if you knew nothing, you're able to do it. And if you know a lot, you're actually able to get more. We're trying to cover both sides of the spectrum. EU price action, yeah, let's take a look. I don't think I looked at Euro this week, but it is trading on. Let's see, looking at GBP briefly. Is there something you had specific on? Because I can look through this here. We had Monday printed. That's relevant low. Ooh, dollar. What is dollar doing here? Okay. That's interesting. I don't know what happened there with dollar. But this could be, I'm actually curious what that is. That's got to be a glitch. I don't think that's an actual candle. So that's kind of throwing me off here. Yeah. Try. Yeah, there's something off with that. I won't even look at dollar first. But it's kind of mirroring the same framework. So I'll go back to here. Checking divergences. So when we see Monday print, so this is what I'm focusing on if you want some clarity. And so my approach here would be let Monday print. I know that we've had a run on this low. I'm now viewing this as a relevant low. We've run that out, and I can see these as failure swings off the highs. That can become a draw. But I want to first check if there is a divergence here with dollar. Just give higher lows. I'm still kind of slow. No, there's no divergence off the highs there. So this almost becomes like a range. Trading within that range, Monday puts out that low. And then we can look inside of Tuesday to see a bullish daily profile, which is printed for CPI, right? So it's going to take out the entire thing. So you can't even trade in this day. We have CPI 830. That takes out the majority of that move. You can check it still, see if there was a continuation offered. A little bit deep back into that range. Curious. 2-minute close above. Right, the logic is there. New close through, that's your continuation signature. After 830, up into that high as your draw. That's technically aligned with what you'd be looking for. On post CPI, we'll have that draw open. We could look for this next day because we have failure swings to that relevant high. Wednesday, you could look for a continuation percent of that previous day range as your invalidation point. Profile 17 candle. It's an hour earlier on Forex, puts in a low, so I wouldn't trade in this candle. That expands through that high, so it's already taking your objective. So again, wouldn't have a trade inside of this daily profile rules, taking out the objective. So you can see bias play out sometimes, but not actually give an entry, which is fine. And then you're going to reset that process, which I'm already kind of seeing off that high on the daily here. We're going back to relevant swing, which we ran out. Dollar here. Fencing. So that reaction, you can potentially see a manipulation. Entertain here for a second. You have to get daily profile confirmation if you're going to trade this as a manipulation. And I was looking at the highs, super unlikely because of the way that this reversed. Leaving low. High. These are leaving failure swings off the highs. Technically in respect to the wick, but it breaks down and it doesn't really is interesting. So there's probably, the main trade I would probably focus on from this week was Tuesday. Right, some of these are just straight shots. You're probably not going to find a trade in that. course, be updated. Yes, basically everything is going to be updated. Yes, this will be posted on Wall. I'll record all of these as long as it's going well in the background. And yes, I will be going to, I should probably do that now. I'll go to this upcoming week for indices. When on a lower time frame searching for signatures, if a series is broken by a different color candle, that means that point of shifts. It depends. So, yeah, I mean, if it is broken up by another, like if it's a series of up close candles, but in the middle is a down close candle, pretty much have two options. I mean, you can still pull from the series that's still being formed there, starting at where it was separated, or you can go to likely a higher time frame, and that little candle that may be separating it turns it into one full series. That's an option you have as well to kind of clear the noise. But yes, if there's some opposing candle in the middle of that series, then it does change where you note it out from. Oh, AUD had AUD used to have great setups. I haven't looked at it in a while. Brutal. It was really nice. Kind of really far back. Like in here. Yeah, that was a while ago. There's emails being sent out. That's slowly introducing it. There will be at the end when that's all set out, we'll set out an entire thing of an overview, and then we'll also likely be doing an event before to basically run through the entire thing. So no one's going to be going into it blind, but we're just slowly sharing bits and pieces of it. Look at Euro on Friday, 8:30 news release. Do you not think it's a valid entry to stop hunt? I can look at this daily candle just the way it's trading up like this. It's a bit tough, but we can entertain this for a second. 7 o'clock, the 8:30 news release. Assuming you're talking long, I don't know if you went short. 8:30. I mean, you went long. Okay. It depends where we're. I assume you're probably taking this here, right? These opposing candles stopped out here. That's what we're looking at. Your objective be of note this high. I'm kind of just entertaining this here. I didn't like the higher time frame setup for the daily profile as much, but technically, let's see, you got your entry here, stop loss, target. You are okay. Time is this? Yeah, I think that signature. So that series of events that you're putting focus on, I like that. So we have run on these short-term lows, 8:30, manipulation, quickly expanding higher, clear signature again, closing back above. I don't know if it's on the 15-minute here. Not as much. I'm usually a 15-minute on Forex, but still 5-minute. Like your idea there makes sense. And you still have some room to previous day high, which can be, that can be your objective. So logically there, it does make sense. Yes, yeah. There's going to be no surprises. Nothing's going to disappear out of nowhere. Yeah, this upcoming week economic calendar, we already pretty much briefly touched on this. FOMC meeting minutes, 2 o'clock, not high impact news. Don't care about it. It's too late in the day. Wednesday's fair, Tuesday's fair. Thursday at 8:30, I would focus on the low impact, so nothing too crazy. 10 a.m. on Friday. These are the two volatility drivers I would look at in this week. Low impact, so I can pair them with the open. And that was it. That's really all we have to care about. There's no high impact news, not going to change the dynamic of when you can participate. So the focus goes to the charts. And we're pretty much in open space again. We're trading back into the range, which is okay. But get rid of this. We're still at all-time highs, right? So I mean, the first obvious look for me is going to be Monday prints. We do have full side potential. So when I look at one side of the market, we formed a divergence at that low. So I'd focus on price in relation to this low on Monday. But my initial look is going to be, because we already set this on the previous week close, is if we have a confirmation of a move back into the range. Because at the close, relevant highs to the left, that would be 100% valid if confirmed by Monday. The only thing on the other side of the market is going to be, I'm just looking at ES running out that low. Or sorry, this is NQ running out that low. ES propped above. Potential divergence here, but then also this is a relevant swing. If we're going to run that out, Monday could create that signature, and we're just, that trend is going to be something that could continue in that move higher. That's really the only area of focus, and that's why Monday matters to me, because that context around these two levels is right. That's what you want. So it's actually pretty straightforward, and honestly, there's a couple ways that this could create a solid opportunity. We'll just see a part of the course talk about entering early. I don't know if I should talk about. I think we already sent an email out. Yeah, we're basically splitting up the course between beginner and advanced. It's because it's, if you have one course that has content that has everything involved, if someone is starting from step one and they're trying to figure out the nuance of when to enter before or after the open, it's just a bit too much. It actually is not helpful. It actually makes everything worse. So we're splitting up the content, beginner and advanced. That's why I mentioned, like, you can take another step, and we're talking about that. Also, I'm always thinking about, for my trading, I do a lot of it. I mean, if you do it so long, it becomes a little bit more subconscious, but I try to refine and build on the ways that I explain my thought process in a way that makes it a little bit more mechanical for the people applying it. So trying to create or just adjust certain things that I can get people to make the same decisions, but maybe in a more straightforward process. That's always something I'm thinking of. You're risking less on days that you have no news. I don't know. So I actually don't consider, like, a day with no news. I don't just assume that can't expand. I don't see too much of a correlation there, so I'll risk the same. It's more about my conviction on the setup. And that news being there or not doesn't really change my conviction. Yes, there will be there. So we have the 3 courses here. It will be 3 courses there as well. Eco, I don't believe so, no. We could though. I mean, I'm not against it. Not planned for now. Nope, I'll still trade with no news. Have a good one, Hans. For stopping in. No, I believe he plans to. I mean, he has a bunch of stuff here already, and he's going to keep adding to it as well. Popped up out of nowhere. Leaning more towards this downside next week. Yeah, I mean, I like that a little bit better, but I'm just noting out that low because I can see the development potentially occurring there, and we have Monday as context. I am considering maybe in the future. I haven't fully decided yet. I don't know. Do we have a stream on Monday? I'm on stream Monday here. I don't think so. Tuesday, no. So maybe I don't know. I'm thinking maybe I'm doing streams on Monday, changing it to that day. I don't know if that's a bad time, but I will have Monday's context, which is usually what I rely on. So considering that. Mechanical way to determine high probability days. I mean, high probability is when you get into like a system that's structured. High probability is going to be more in terms of your experience because you just know what has to play out in order for that to be ideal. But like an ideal setup is going to be, right, you're going to be trading the high probability is reversals already formed. You're trading the continuation day. There's a small wick. It's a London or New York reversal profile. You know, you're getting entries right at the open paired with a good confluence. So it's like there's a mix of things. So if you kind of think of each step, it's basically a setup that has the ideal version of each step. So a very clear daily time frame. You're trading the continuation day. You have a very clear New York London reversal profile. The wick is small on that daily candle. You get a higher time frame entry signature. That's very obvious with multiple confluences, right? Like these things that we love to see all the time. That creates a high probability scenario. Monday would be amazing. Yeah, I'm considering doing it on Monday. Maybe like earlier morning to afternoon, so there's some level of development there. No, I'm just saying if I do streams on Monday, if I adjust to that, I just gotta see